Hi, and welcome to this week's DHL Supply Chain Pricing Power Index. I'm Kevin Hill, here with our special guest, Kyle Lintner from K-Ratio, which is a risk management firm out of Chicago.
Right.
And what we have this week, we have 35. We did have 40 last week. We had to bump it down 5 this week. And for a quick reminder, as it goes to 0, the shippers have the pricing power, and as we go to 100, the carriers have the pricing power. So start off with freight type of metrics. Volumes very flat. Tender rejections are coming down, meaning that there's a loosening of capacity. It's still better than it was in January of 2019 and most of 2019 in general. But it is still falling. January is a soft month anyway.
To be expected.
To be expected. And then we have really good economic news.
Right. We've seen positive retail sales, positive housing starts, classic American retail / house buying consumer. What that means for us is more goods and supplies flowing through the economy, which obviously is going to be positive for freight. Relatively flat, like you mentioned, volumes year over year.
Construction's really good. 99.1%, or was it 99.3% on the University of Michigan Consumer Sentiment Index? It came in just a fraction below expectations, but 99 is still more than it's been in 20 years since Bill Clinton was in office. So
I know we're down
really
5 points here, but all things considered, I think it would relatively healthy freight market.
Very healthy. 35 comes down. It's a little bit seasonality in play, and then last Friday, J.B. Hunt was the first brokerage to really, and transportation company, to really report earnings. And
little small blip in there. They mentioned they saw tightness in capacity, which is positive momentum for the industry. And I think that's kind of why we're in this area instead of closer towards 0.
It is.
Yeah, exactly. We're seeing some movement of freight as it relates to volume, and we see this capacity begin to tighten. The next step then obviously is possibly rates moving higher.
Rates moving higher, right? That's what we're all kind of waiting for on the carrier and broker side. Of course, on the shipper side, you kind of like the like the environment right now of strong macro data coming out and low rates. But I think the tightening of capacity is coming. J.B. Hunt really highlighted that coming in, not only in peak season Q4, but coming in mid-January up until...
And we saw some of that in the rates, right? December was a positive movement in rates. We see some of it coming down now, but that's to be expected. But we look at the year-over-year comps, you're seeing flat volumes, and what are we, down about 1% as far as tender rejections are? And that's what we see manifest itself in the somewhat lower rates.
Somewhat lower rates, and to be expected January and February, but it's kind of laying a really good foundation as we come into March, April, construction, produce season, construction season, really heavy industry manufacturing season coming in. So it's setting up to maybe climbing back up.
The conditions are there.
The conditions are there.
We'll need a catalyst, but the things you would want to see to get that above 50 are present.
They are present. It's a real possibility now for the summer months.
Right.
It really is. Well, thank you, everybody, for joining us for this DHL Supply Chain Pricing Power Index, and have a great day.